Hello everyone, welcome back to Daily Stock Analysis series, and I hope all of you are doing great. So today we are going to take a look at two pullback candidates and how to trade them and what's next and the whole analysis. Before that, standard disclaimer: I'm not a SEBI registered analyst, and any stock discussed here is not a buy or sell recommendation in any way. Please consult your financial advisor before taking any trade. So let's get right into the video. The first stock we're going to take a look at is Galaxy Surfactants. Its IPO came around Feb 2018, and after that it was in a downtrend till 19th Feb 19. For over a year it was in a downtrend. After that it started going up and again faced resistance at the same level, the IPO level. The day IPO listed, that level it faced at that level it faced resistance again. After that came COVID crash, and it went from 1700 to around 1000 rupees. So let's take the broader look first. After making the COVID low in March 2020, it's been in a uptrend. Since then it's been an uptrend. It's rising steadily. Okay, so and now let's take a closer look. After rising for almost like from March to May 2021, for like almost 12 sorry 13-14 months. After rising for 13-14 months, it started consolidating at this level after facing resistance at 3300 or 3290 levels. One thing, resistance or support is never a straight line. It's not a line, it's always a zone, a range. 20, 30, 40 rupees range, it's always a range, it's never a line. Like in this case 3000, the whole resistance range is from 3290 to 3335. So it's never a straight line. Always remember that support and resistance both are never a straight line. Okay, so continuing with this, it started consolidating since forming a top on May 17th 2021, and for almost 2 months, not exactly 2 months, almost 3-4 months, it was consolidating in a range, this broader range from 2900 to 3290 or 3300. It was consolidating in a range. Let's apply some moving averages. I'm going to apply 21 exponential moving average on weekly charts. As you can see, it came down on 23rd August 2021 and took support around this level 2900 on the 21 exponential moving average on weekly charts. And after two weeks, it broke out. And look at the breakout, look at the volume. The concept I have explained before in the previous videos. The concept of volume: whenever stock is in a consolidation or in a downtrend, low volume, it should be combined with lower volume, and a breakout should always be combined with a higher volume. So let's now take a look at daily chart. This is pullback candidate. Okay, we're gonna trade it here after it has come down a bit after giving the breakout. The breakout was beautiful. The volume was around 400k, and before that, while it was in consolidation, volume was around 40, 30, 30, 40k, and now on the day it broke out, it's almost 400k. Okay, so now as you can see on daily charts also, it's taking support at 21 EMA. Let's apply 50 EMA. The red line is 50 EMA and the blue line is 21 EMA. It was taking support at both of these. Only once it came down, and that too without volume, and next day it bounced back. It bounced back beautifully, closing at the day's high on this day, 24th August. It went back and closed at the day's high combined with volume, and it started rising again and again faced the resistance at this level on 2nd September. And after a few days, on 14th September, it broke out, and it broke out beautifully and combined with volume. Now what? Now as you can see, it faced around resistance again. It faced a resistance around this level 3570, and it was a Fibonacci resistance. Okay, so let's take a look at it. We're gonna apply from swing high to swing low. See this level 3550. It was Fibonacci uh, resistance level 1.618. Okay, so after that, after facing resistance at that level, it's coming down again. And look at the volume. Like I said before, volume should always be low on a pullback or in consolidation or in a downtrend. There should be a low volume. Look at the difference. Volume was 400k when it broke out, and next it was 120k, and after that it's 40k and 45k. So what's next? Most probably it will take support around the previous resistance zone, because every time a stock breaks out, that specific resistance zone becomes the support zone. So it can take support from 3290 to 3335 range. So we're gonna wait and see if it consolidates a bit for like this. It can consolidate a bit like this for a few days, and whenever we see a sign of reversal, and what is a sign of reversal? A big green candle closing at the day's high combined with volume. We're gonna enter it, and again it will face resistance around 3550 level. But this the pullback always gives a very good risk reward ratio. Like, you can buy it here, and you can always keep your stop loss below the previous resistance zone, that is current support zone. It always gives the best risk reward. So you can buy it here around this level whenever you see a sign of reversal, and you can keep the stop loss below the previous resistance zone, because if it breaks that zone, you'll know that the pullback has failed. So this is the ideal region around this level, around 3290 to 3335 to 40. This is the ideal zone for any pullback and for any entry. So your target can be, first target can be 3550, and above it is around 4000 rupees, and your stop loss can be below 3290. It will give you the best risk reward ratio. And okay, so let's move on to the other stock we are going to discuss today, and that is Fiem Industries. uh, let's start with the weekly chart or the monthly chart. As you can see, it made a top around 1500 rupees back in September 2016, or sorry, October 2016, and and then it came down, and it tried to recover, but again faced resistance at this level around 1780 to 1100 on September 2017 and Jan 2018. After that it fell drastically, and now it's trying to recover. Let's remove the moving averages for now. It's recovering, and look at the volume. During the hold down move, there was almost no volume, around 150, 180, 200k, 250k. And look at the move is combined with 652 million, 3 million, 1 million volume, simple sign. And when it broke out, the volume was highest, around 5.281 million. So this is the broader view of the stock. It's now moving above both the 50 moving average and 21 moving average. At 50 the red one, and 21 the blue one, and the 21 is above, has crossed 50, and it's now trading up a bit. Now let's look at the weekly chart. As you can see, it broke out 1-2 weeks before on 30th August, and after that it's facing resistance around this. Look at the wicks, long wicks on the upper side. So it's facing resistance around this level from 1120 to 1200 level. Now let's take a look at the daily chart for specific entry. The same concept as the Galaxy Surfactants. It's facing resistance and it came down and took support exactly. Look at this. Took support exactly at 21 moving average. And the previous resistance zone is here around this level from 1162, sorry, 1062, 1080. This whole previous resistance zone now acting as support, and the price has pulled back, and it gives the best risk reward ratio to us, as we can keep our stop loss below the 21 moving average line, like around 1000 or 1020, and it can easily move to 1500 level. It provides the best risk reward. And look at the volume. There is no volume, almost no volume. Whenever look at the green day, the volume was 367k, and before that it was 60-70k, and now it's pulling back with very low volume. This candle is a concern of 16 September, but again, look at it, recovered from day's low and closed around the previous day's low. Okay, so let it can also do something like this. It can move, consolidate here for few days, and then it can eventually move up. We'll have to wait for the resistance. Entering when the stock is going down is not a good idea. Always wait for the reversal, and before it there should be a small consolidation, or one day reversal also works, but there should be a reversal, and reversal should be like a big green candle closing at day's high with volume twice or maybe thrice than the previous candles, previous 5-6 candles. That would give you the sign of reversal, and you can always keep your stop loss below this level, below the 21 moving, because if it goes below this, we know that the whole pullback trade that we were taking is failed now. So that was it for today. I hope you like the video, and if you like the video, please consider hitting the like button, and don't forget to subscribe and share, and press the bell icon so you can get the update of my every video. And be safe, take